Hello, this is Mike Wade, Chief Options Strategist for Tom Gentile, and welcome to this video featuring Tom's tools and yours truly. Stock and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose. I'm not offering any kind of buy or sell recommendations of any kind on stocks nor options. I'm a trader, I'm an educator, I'm not here to give advice, so please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise, and feel free to read the balance of the disclaimer at your leisure. All right, in my last video I spoke about iron condors and how they can be used to capture high probability profits. And in this video I want to talk to you about a new strategy similar to iron condors that provides a very high probability of profit and more profit than the iron condors. So here's an example of a stock. These are the kinds of stocks we want to look for. This is Netflix back on 7/18 of 2019. Netflix tanked on some bad earnings news, lots of volume. And typically what happens when a stock does that is that it'll meander sideways, as was the case with Netflix. So the idea here is when you see a stock tank like this, what we want to do is put on a trade that will profit in a range given by where the stock closes after the gap down. So this is what we want to do. We want to create a profit zone, make money in this profit zone. The strategy of choice is the butterfly. This video is about profiting from stocks that tank using butterflies, and namely Tom's Butterfly Finder. We'll talk about butterfly construction, how to identify great stock candidates. I've already given you a hint about how to do that. I want to talk to you about finding great butterflies with the scanner, and it's important to talk about entering and exiting, primarily exiting. First, let's talk about how to construct a butterfly. It's really a combination of two trades. So here's an example of a stock that I just showed you. This is Netflix. What we want to do is put on a trade that profits in this profit zone, and this is a look at a butterfly. A butterfly is a three-leg trade that provides a profit zone within which we make money as long as the stock goes sideways. All right, so here's the body of the butterfly here. This is profit down here. This is risk to the left of this break-even line. So we have lots of potential profit and just a little bit of risk. One of the benefits of a properly structured butterfly is high reward to low risk. This would be the body of the butterfly here, the big witch's hat part, and then the outskirts are the wings. The break-evens of the butterfly ideally will encapsulate the stock price movement. We want stocks that are moving sideways, of course, similar to a calendar spread. So this is a beautiful example of a butterfly. So how do you build them? Well, it's two trades in one. Here's an example of a butterfly. Notice that we're using puts here. We can use calls as well. Notice that there are three legs, and between each leg is 20 points. In the middle, I have 325, and then on top I have 345, and beneath I have 305. So here, let's break this down a little bit. On the bottom, what I have is a single bull put spread. We're selling one 325 put, we're buying one 305 put, and then up top we're doing a bear put spread where we're buying one 345 put and we're selling one 325 put. We end up with two short 325 puts and then a long above and a long below, a long put, that is. Notice something else here. The price of these options is very expensive. Netflix is an expensive stock. At the time this video was recorded, Netflix was trading around $3.25. You've got $13 options, $25 options, $4.71 options. But look what happens is when you put them all together, buy one, sell two, buy one, our net debit in this trade is a mere $271 for a potential profit of $1,729 for a return on investment potential of 638%. Are you serious? Yes, I am, and welcome to the world of butterflies. All right, now that we understand the basics of butterfly construction, let's hop in and do a search. Let me show you how to find these things and how great they work. First, before using a butterfly, it's important to find great stocks. Netflix back on 7/17/2019 had some really bad earnings, and the stock was taken behind the woodshed on 7/18. The stock tanked a lot, and normally what happens when stocks do that is that they go sideways for some period of time. Notice also that there's a lot of volume, and typically there's a lot of implied volatility as well. All of those are great conditions for a butterfly. So when you see stocks like this, that tank like this, consider them for butterflies. How do you find these things? You can do searches within Tom's Tools for biggest price change down in stocks. You can watch CNBC. Stocks like Netflix that get hammered like this are oftentimes talked about in the news. So once you've identified a stock that you think is going to go sideways, that's tanked, and therefore you think is going to go sideways, then you can come into Tom's Tools and let's go find a butterfly. I'm going to go to Searchers, Single Strategy, and Butterfly. Notice as well that I'm back tested to 7/18/2019, which corresponds to this day right here where the stock tanked. Again, I'm expecting the stock to go sideways from here. So in Butterfly Finder, there's a handful of different types of butterflies. The two that I want to talk about in this video are at the money put, at the money call butterflies. It really doesn't matter if you use calls or puts. I'm going to select puts. Again, you can select calls if you wish. Out of the money call and put butterflies are also very useful. I'll talk about those in the next video. Now I'm going to be using the wizard criteria in order to create big fat butterflies. I want wide butterflies with maximum probability. So what you got to do that is to alter the wizard criteria. And what I want you to do is select show criteria, and then right here where it says buy option strike difference from sell, make the minimum 10 and the maximum 30. You can go to 40 if you like, doesn't matter too much. And then I want to go to stock symbol and type in Netflix. That's the stock in question. Hit my search button. Again, this is the day the stock tanked. And this is the result set. There's quite a few butterflies to choose from. All of them have different expiration dates and different strike price widths. Let's take a quick look at what comes up. You've got your stock symbol, the close. You want your center strike to be as close to the stock price as possible. You've got your legs. Notice in this case, the first one has 310, 325, and 340 strikes. So they're 15 points apart. We're using August options. These are the actual legs. We got the volume, the open interest, the days to expiration, and the earnings. You want to get out of these butterflies before an earnings announcement. You got your max profit, your max loss, and then your maximum profit over max loss, absolute value of. That is your return on investment. This first one on the list is offering a 1,227% possible return on investment. Now, this one is 15 points wide between strikes, but if you come down here, notice that this one is 20 points wide in strikes. So that's a bigger, fatter, wider butterfly. It offers you less return on investment, in this case, 638%, but offers more probability of profit. So I'm very happy to take more probability and still have the chance of making 638% return. Go ahead and select either of the strike prices. This is what you'd see in this case. Notice that we've got high price strikes. We're buying one 305 put. We're selling two 325 puts, and we're buying one 345 puts. All of those expire in August, which is 43 days away. All of that's going to cost me $271 and give me the chance to make $1,729 for a whopping potential profit of 638%. So this trade makes money as long as the stock stays between these light blue break-evens. So let's see how this thing did in a week. And just 1 week later, on the 25th of July, you can see that we already had a double on this particular trade. Notice here that the stock moved down a little bit and then back up. That's typically what happens with these stocks. They go sideways, and the longer it does that, the more money we're going to make. Exit rule number one for these, and this is a great thing to do, especially as you get to know butterflies, is if you double your money, get out. And that's my original recommendation for you. As you become more versed, you can consider other exit strategies. A bit more on exit strategies with butterflies. If they don't work out, this is the critical part. If they don't work out, you need to know when to exit. Remember, we have these break-evens. Let's use those as exit points should the stock cross outside of the profit zone, above this upper green line or below this lower green line. Get out. Notice, if you do so, you're not risking very much whatsoever. That's one of the best benefits of these butterflies. Get out if the stock crosses above or below these break-evens, and you just won't lose much on a butterfly, all the while giving yourself a chance to make high probability doubles. In summary, here's the butterfly finder. You pop into the finder, specify at the money put butterflies. Yes, you can use at the money call butterflies. They work the same way. Click the show button. Make your butterflies fat by specifying 10 and 30. Next to buy options, strike difference from sell. Put your stock next to stock symbol. Click the search button and then go out and pick the butterflies of your choice. Again, I prefer whiter and I'll take less money on my butterflies, and I suggest you do that, especially as you're getting to know them. All right, there's the brave new world of butterflies. Hope you enjoyed the video. Good luck with them, practice them, have fun, and I will see you in the next video.